Welcome to a very special edition of The Bank Tellers. I'm Micky Tesfaye, Head of Audience Development at Money 2020. And today I'm really excited that we are joined by Goldi, VP of Payments for Fireblocks. As many of you know, the intersection of TradFi and DeFi is a major topic we're going to be exploring in our up-and-coming Money 2020 USA show this October. So we're delighted to have Goldi to give us some of the kind of scoop on what's been happening in the world of DeFi and TradFi in the last few months. Hey, Goldi, how are you doing?
Good to see you. Thank you, Mickey. Thank you for having me. Happy to be here.
Glad to have you. I feel like the only time I can corner you is when I can find time to talk to you about DeFi and blockchain and digital assets. What an exciting time it's been for the industry that you've been such a big advocate of for the last few years. Tell us about what you guys are seeing, what's been happening, how everything has been unfolding the last few months.
Yeah, no, that's great questions. And as you're saying, this year is obviously it's spectacular. It's challenging. It's a lot of things, but it's really a really good year for everyone in our space, right? So maybe for people who don't know Fireblocks, what we do is we provide infrastructure for more than 2,400 different institutions, whether those are exchanges and about 100 banks, fintechs, obviously, and large payment companies, right? Like WorldPay, Visa, etc. And what we're seeing in terms of growth, obviously, is great in the market. Just within Fireblocks, we processed in 24 about $3.8 trillion. This year, probably going to go closer to $6 trillion that all these clients are moving. Half of that, and I think that's where the focus in this year is, about 56% actually of that is stablecoins, right? So imagine we'll see about, let's say, $2.5 trillion worth of stablecoins moving through those more than 300 payment companies and fintechs and banks that have came in the last really 18 to 24 months. That's amazing, right? Now, if you take that number and you start looking at what's behind this number. So I guess, what we should probably say, and, you and I, Mickey, I think, we try to be as truth tellers as possible, right, in this space, because if you now just log into LinkedIn, there's just so much noise and so much clatter. And we've talked about this, people might think that stablecoins are going to solve all of humanity's problem, not just payments, not just blockchain, will solve everything. And, admittedly, they are overhyped, right? But it doesn't mean that it's not an amazing rail that has application where it has applications. And I think that's what we're seeing. I think we're seeing, a lot of companies coming online, doing a lot of payment use cases like payouts and merchant settlements and, banks looking into custody, et cetera. And we can dig more into that later. But I think this has been a transformational year, mainly due to probably, 2, 3 major reasons. One is obviously everything that has changed in the US with the administration and then the regulations as well, right? Like administration change is one thing that changes the sentiment of how regulators might look at this, but then actually putting the Genius Act, right? And now other obviously bills that are, may pass hopefully soon. That has been transformational. I think Circle going public was a big event for this industry. Circle is a household name in the crypto space, but if you go out of that, comfort zone, not a lot of people knew that company per se. Now they have way more visibility with the regulations, with change of administration. A lot more people are coming into stablecoins, obviously looking at a public company that's doing this. So I think that's really contributed to everything we're seeing. And again, we can unpack probably not all of it, but some of it in the show today. So a lot to cover.
Wow, that was a lot. And honestly, there are so many gems in what you were saying, right? And just to clarify for the audience too, right? The projected 6 trillion that's going to be moved using your infrastructure, all of that is on chain, right? And 56% of it is going to be stable coins, which is, both two of those numbers to me are astronomical. The idea that already there is $6 trillion of value being moved on the Fireblocks infrastructure. And I think the really important piece there is the amount of work you guys have done, with the regulatory compliance, the fact that you work with actually a lot of household names. We're not talking about $6 trillion in niche kind of crypto bro Twitter space transactions, right? This is by huge companies. And then the fact that so much of 56%, sizable amount of that is stablecoins is fascinating. What
I
is,
agree.
go ahead, please.
No, I agree. And I think that, the trend is sort of clear. There's people are not asking why stablecoins anymore. They understand that this is the payments rail, whether you are a bank, whether you are a large payments institution or remittance company, you understand that it's a rail that you should probably start, learning at least how to work that out. Because for specific use cases, as we said before, and again, not for everything in this world, but if you actually want to move value cross border, in some cases, the speed that stablecoins give you, and I keep saying this, it's not about the cost really, it's about the speed, it's about the velocity of money. If you can do a transfer within, let's say, like a few minutes instead of 2-3 days, that's great. If it might cost the same, but if that time that you've shortened actually allows you to produce some sort of economic value, if you're, paying an import or export or whatnot, and now that you've released that container from the port 2 days earlier, you saved $50,000. That is what you're saving. That's the economic value. It's not about the stable coin costing more or less, because again, honestly, it's not necessarily cheaper. There's FX everywhere. So I think it's great that people are finding out what are the right use cases. I think this year, is still really around people asking, what is my strategy? Right. And a lot of people are talking to a lot of different blockchains, which are really trying to advocate, more usage, and talking to all the largest players in the industry. And they're really trying to understand, wait, I'm a bank. Am I supposed to love stable coins because people want to use them and it's all the hype right now? Or should I hate them because it's a one-to-one reserve, and if I need to hold a stable coin, I actually can produce yield from this, for my own, or do this used in the repo markets and whatnot. So they're obviously conflicted. And then, okay, but I see that people want to use this. So how or what use cases should I implement? Should I become a custodian? Should I just allow payments? Should I actually be in the flow of funds here and start allowing people to convert, to on-ramp, let's call that, from, dollars, pounds, whatnot, to a form of digital asset? I think those are all good questions. And by the way, to each bank their own, separate set of answers, I assume, right? We're seeing, and please stop me whenever, but what we're seeing is that for example, banks that operate outside of the US, because stablecoins are really, in a way, this really great hack on how to access US dollars. So the banks that are outside of the US, they're looking at the FX angle. If we can now receive on behalf of our clients, whatnot, USDT, USDC, USDG, whatever, and then do the FX and convert to a local currency, then okay, that allows us to capture a few good basis points on those type of transactions, right? Banks in the US don't have that. It's all dollars one-to-one. You can't really charge a lot for that. So they're faced with the question of, what is our role here? Should we allow faster movement? Should we try to maybe do a tokenized deposit? Should we issue our own stable coin? Maybe that's how we do this. So I think that those are the questions everyone's confronting with. And I'm sure a lot of your listeners are thinking, okay, yes, but tell us, which way should we go? But they're looking at
Yeah,
you,
I
not at
mean,
me.
and I think you're going to have to give them that answer. But I guess you said something which was really interesting, right? And it was, I guess, an overriding sentiment in what you're explaining, which is, it seems like with crypto, with blockchain, with stable coins now, there seems to be a confusion around the form factor of this payment instrument that maybe doesn't exist within other parts of the fintech ecosystem, right? I think one thing that's really interesting in fintech is like there's been a real shift in the culture of financial services where it's increasingly become a marketplace of options, right? I think, I as a consumer can have an account with a traditional financial institution, but I can also have a neobank, and then I have maybe an investing app. And I think we've all come to realize actually that reflects the complexity of consumers' needs and preferences. And it sounds to me like, that doesn't and hasn't mapped onto this conversation around blockchain-based solutions, right? It feels like a lot of that conversation at least until maybe, dare I say, this kind of past 18 months, has been a conversation of one or the other. And increasingly, that shift is now becoming offering consumers and offering your clients, whoever you work with, this optionality to have a marketplace of options. Certainly, to be able to, you might need to use stablecoins because your business requires pretty quick real-time reconciliation, for instance, relatively. And then in other instances, there might be other benefits that you gain. I think, you did a fantastic session in Europe. And one thing that in your session you guys covered that I hadn't really considered before is how native stablecoins are for the AI economy now, right? A few months ago, we had the Scale AI, acqui-hire by Meta, but Scale AI exists as a business, and part of their business is having lots of folks working for them across different markets, right? Because you need all of that kind of localized AI knowledge, translation, whatever it may be, and you need to be able to pay these workers. But in places where these traditional rails don't exist, stablecoins offer a very unique use case. So I guess my question is a long-winded answer, a question to say, what has changed to change the sentiment around, right? What is there a change? Is it much more because of the legislative stuff, because of the kind of the use case becoming much more urgent now, or is it an understanding that's happening?
So, as always, the answer is not, very much like, either this or that, 0, 1, black and white kind of answer. It's a lot of things. So I'll give you a really interesting example. USDC grew this year, I believe, something around 45% in circulation versus a growth of Tether's 20%, right? But Tether still has about $167 billion of reserve. Circle has, I believe, 65, 70 billion. What was the major growth event for Circle? So it was actually when President Trump in the US issued his own meme coin early in the year, right? So what happened there? Let's just look into that. It's just interesting because payments and real innovation in payments comes from the grassroots. It's not because some corporate decided from now on the world should use this thing. People actually need to do something with a product that probably a product manager never thought of. And then that becomes like a real need and a real, something with value that answers a pain. So when the Trump meme coin went out, it got a lot of publicity. 8 million new wallets opened that day, right? It almost crashed, by the way, all crypto infrastructure. It's like 8 million wallets happened that day. And it's like almost the single largest day in, I think, in our space where people opened a wallet. And then, because they wanted to partake in that, whatever that is. And then obviously a few hours, most people realized, well, you know what? We're not going to get rich for this. Let's sell our meme coin. And what did they do? They were buying a meme coin on the Solana blockchain, and they sold that meme coin, hopefully profit, probably not, and they went out from that meme coin to USDC. And that's the single largest day of growth of USDC. And why? And now, having tracked those 8 million wallets, because again, Fireblocks powers about 15% of all blockchain transfers globally on all blockchains. And we see all these shifts and movements. Tracking these wallets, about something like 50 to 60% of those wallets are still actually moving USDC between themselves and other wallets. So those are like net new users who came to this space because of one thing, discovered, hey, maybe I can actually move value with this, right? Maybe it is easier. And that caused like a massive growth event, right? And what I'm saying by this is I'm actually telling you that it's not just like one thing that caused this growth of stablecoins. It's now users on the one hand, and it's businesses that are happy to use a payments company that's doing a blockchain transfer behind stablecoin transfer behind the scene, because now they know there's regulation and they shouldn't be fearful. And it's large remittance companies. There was an announcement a few months ago by PayPal's Zoom, a cross-border app, to Cebuana, a large provider in the Philippines, that they're now settling in stablecoins. So it's a lot of different pockets that have now moved from a POC stage to an actually, business plan and real production stage, right? And I think it's all of these things together, obviously, and we've been saying this for a long time. It's all about regulations, because there's only so far innovation, innovation helped us in an unregulated space to maybe create some escape velocity for this industry and bring it to up market. And now there's a crypto czar, but it's regulation that took it mainstream and helped us cross the chasm this year.
I mean, I love that. I think and I think that's such a powerful point too, right? Because you made this point a lot more kind of succinctly and a lot more, better than I could say it. But I've heard you in the past talking about the fact that, stable coins came about because they found a user-led market product fit, right? Being back in the days, being able to exit on-ramp and off-ramp from like these exotic meme coins. And then now it seems like, they've kind of been the thing that's ended up providing that institutional grade use case as well because of all the different, kind of components that come into it. And in part, I guess the regulation piece comes into it because, stable coins are one-to-one in terms of like the being pegged to and being pegged to a currency. So it allows, institutional users or businesses to have a bit more clarity in terms of being able to benefit from them. I guess, a question I have for you, changing track a little bit, is as you guys have such incredible visibility into what's happening, especially in the stablecoin world, where are you seeing the real kind of volume start to emerge? Is there any kind of exciting areas where you're looking at the data and saying, wow, there is some real unexpected growth here? Maybe it is expected growth, but you're kind of really seeing an, an over expected kind of uptake in usage. Is there any kind of areas you can point to yet?
Yeah. So good question. So I want to talk about, I guess, breakouts and fake breakouts. So earlier in the year, where everything was changing from a sentiment perspective, we saw what I believe is a fake breakout, which is a lot of new startups being funded by VCs that started to offer a solution of payment acceptance in crypto. And this is not, I'm not saying here that payment acceptance in crypto is not a valid company or a need. It was a fake breakout because that's not where the industry was going. Yes, there was like a lot of positivity and momentum, but it's not because more people wanted to pay with Bitcoin or ETH, or because more businesses were now happy to get Solana as a payment method. It wasn't because of that, but we suddenly saw at Fireblocks like this spike of like a lot of new entrants, like, probably like 40, 50 new entrants into the space for crypto acceptance. Now there's great companies in this space, like, AAA, Coinify, etc. Like they're all great. But they found great niches in businesses that they're powering, and they're doing great work and sending that out there, but we're still not there as an industry. So I would say that's growing, but that's not where we've seen as much growth, right? Where we've seen the most growth is really on the B2B use cases, where there is a payments company that, I think that Conduit is a great example of that. Like it's a payments company that, or Yellow Card, right? That has access to local fiat rails in different places. And they're telling their business clients, not consumers, not whatever, they're telling their, like, again, I'll go to the importer exporter use case, for example. They're telling them, I'll make this transfer faster for you, and it will save you capital. And I can do this not for, $1 million. I can do this for $100 million. Right. And that's now possible because there's more liquidity globally for stablecoins. So it's all really related, this like flywheel that powers one another. Right. And those companies have grown from being about, I want to say 25% of our monthly volume to being about 45, 50% of our monthly volume within the payment space, right? So we see that as growth. The other thing we're seeing is that the different remitter companies, and remittance is obviously a huge industry, about $1 trillion yearly of money movement. That industry has been living on pre-funding, and now that, again, regulation allows them to do more, right? They are saying, okay, let's shorten the pre-funding time. So we've seen this come up from literally under $100 million a month about 2 years ago to now something like $5 billion a month. So that's great growth. And I actually think that that would become 10x or, probably 100x in 10 years, but X by like next year at least. Right. So that's where we're seeing amazing growth. And I think that it relates to what you were talking about, the form factor. I don't see more users looking for USDC per se. I see more users now having more possibilities to download a fintech app that tells them they can hold a dollar. Like Dollar app in Latin America is a good example of an app that has millions of users that are holding dollars in their view, and underneath it's a stable coin on a blockchain. But again, this is the form factor. The users don't care, shouldn't care. Even the stable coins are now super hyped. We need to make sure that money moves faster. They, again, just want to pay, right?
And I think that's such an important point, right? Like most consumers, sometimes we do forget in fintech, right? Most consumers are not going to be delighted by their payment experience. They just want it done, right? I think it's a really important point in terms of thinking about the priorities and delivering for what consumers need. I guess a question to you is, let's say I'm, senior banker, a bank executive, and I'm listening to this conversation right now. And, you guys at Fireblocks, you're, like you said, you power over 2,400 companies, a significant amount of the on-chain, especially stablecoin transactions. You're seeing what's happening because you're powering it. For someone like a big bank executive, and I'm listening, who's listening to this conversation, what would you say I'm missing out on? And what is the mode of thinking that I should put on right now to understand what's going on with DeFi, with stablecoins, and specifically how it relates to my business?
Yeah. So I think again, for each bank, obviously their own set of criteria and decisions of what they want to do. There's a really great piece by Nick Philpott from Zodia Markets on like the 8 different revenue strategies that banks can look at, anywhere from issuance of a stable coin to just managing reserves to being a custodian to doing FX, everything we sort of talked about. Even going back one step is understanding that at this point in time, we will probably have some form of a payments rail that is more digitized than what we have today, just with ACH and wires and even SEPA, PIX, whatever. And that form will be programmable, etc. And again, that's like the future. But at least today, that is becoming a de facto interesting form factor that you should actually look at, or payment rail you should actually look at. And you should have your folks at least understanding, how should we do AML here? How do we do risk assessment? Like, how do you do everything you already know how to do? How do you apply your KYC, parameters that you're collecting in some flows to this flow? How should you be thinking about this? That is, I think, the first thing you should do. And the easiest way to do it is literally just, go to one of those issuers globally, open one of the accounts there, and just really start on your own treasury, move it and hold it and see, understand the controls you have. What do you need to actually do it? That's like, I really think that's step one, because it doesn't matter if it's this year, 2 years, 3 years, 5 years, this form of either a stable coin or a tokenized deposit or some other form of security, it will move on those rails. And you want to be, if you care and if you have in your agenda, to be, and let's say not even tech savvy, but at least like understand what's happening, you need to make those moves. Now, not all banks are huge banks that have 300 people in their software or IT departments or product and R&D, right? Some are regional banks. Those banks probably won't build anything in-house, but you probably start looking at how can they as a bank be, in a way, crypto remote, work with a crypto company, understand how that company can help them, even based on a fiat-based relationship, can help them offer these type of services, and start understanding what does that entail on them on a bank and what opportunities it opens for them. So I think that, the worst you can do probably is just come up with a statement that doesn't match your needs, which is, what we should do? We should just issue a stable coin. Maybe. And, when Bank of America says that publicly, it makes sense because they're Bank of America, maybe, right? Fine. But does it make sense for all banks? Probably not. So it's really about who's your clientele, what's their pain right now. Let's solve that. Let's see if we can match that to pain and not the other way around, as we've done in this industry for a lot. Like, oh, here's the technology, let's find, someone to use it, right? So it's the same basic rule. Where's the pain? Let's solve it. Can this solve it? Great. Let's put stable coins on this.
I think I love that because it's actually very practical, right? And it's I think the biggest takeaway from it too, what I'm reading is you can't look at this kind of technology as something that's esoteric and for others. This is gonna be part of the new kind of financial infrastructure and plumbing of the world. So you need to kind of find a way to start engaging with it and think about how you start applying some of the things that you're already good at as a bank, AML, KYC, all of the kind of compliance processes, all of the things that any financial transaction will require. You need to start thinking about how you integrate that into this mode of technology and payment infrastructure. Is what I'm taking away from what you're saying. And I think that's an important one. I think one last question from me on this in general. I know we're coming up to time. I know you and I can talk for hours on stablecoins and DeFi.
Yeah.
I guess for you, from what you're seeing, and you've been in this space for a long time, you've been advocating for clarity and regulatory clarity there for a long time. What is the thing that gets you most excited about when you're thinking about the future of this industry and this space? What are you really just pumped about?
Yeah, I think, look, I mean, there's the holy grail, in my view, of a payment transaction is a user, a client comes into a store, they use whatever form factor they want, a phone, a card, whatever, they pay with a tokenized something, and then by the time I leave that store, the payment is already with the merchant, and that's I think what we all probably want for businesses, better efficiency, deals being settled, reconcile on the spot. And still, we need to make sure that companies that are obviously processing all of this are still making money. That's, I think, the challenge. But I'm excited about that becoming something possible. That's number one. Number two, and again, that's like, hopefully I'll get to see that, right? Number two, I'm just excited that everyone is coming into this on this journey now. And even though that this is, again, the phone is ringing, the email are piling up because more people want to learn about this, which is super exciting. I'm really excited for when we all get to be on the same sort of basic ground level of what stablecoins are for now. And then we could all move to step two, which is programmability and doing really amazing stuff with purpose-bound money and figuring out how we can make money droppable globally, and how a US denominated stable coin could interact with a European one quickly, or a Singaporean dollar, whatever, right? So that is where I'm most excited for the future. And for now, I'm excited that everyone's coming in and they don't ask why anymore, but they're asking how.
I love that. And I think the point you made around what you said, in terms of you would love to be able to go make a payment transaction and that the fund settled very, almost immediately. I love that because it's really not about the technology. It's not about how it happens, right? It's ultimately an outcome. And I think that's such an important point to caveat and highlight, because at the end of the day, you know, payments, all of these things, we don't pay for the sake of paying. We don't want to have real-time payments or a stable coin-based payment solution for the sake of it, right? It's ultimately all about the function and the purpose, and but hopefully making people's lives better in that process. Um, Earlier on, for any bankers out there, Goldi suggested, you go out to one of these technology providers and have a conversation with them. I'll go a step further and say, make sure you come to Money 2020 USA, where you can talk to folks like Goldi and all of the other great companies that are actually building the rails of the future. You can, spend more time with Goldi, talking to him about what he's very excited about. Until then, Thank you so much, Goldi, for your time. It's been a real pleasure and it's been super insightful.
Thank you. It was awesome. Hope to see you soon in person and definitely at Money 2020.
Thank you, Goldi. See you soon.